Hello and welcome to Getting Hammered, the show where we show behind the curtains of everything auction. I am John Morris, owner of Prime Property Auctions, and this is Lewis Guarin.
Hello. Oh, I'm looking at the camera. I'm Lewis, also owner of Prime Property Auctions, and I'm going to read from the script. In the spirit of being transparent, we decided to start this limited series podcast to answer some of the questions we're most commonly asked about all things auctions, and today's focus is trading. Now, what is trading, John?
So, trading is when you buy a property and you sell it straight on without doing any work. So, you buy it super cheap, and then ideally you sell it through auction to another investor who wants to do the property up and maximize the value and then sell it on.
Yeah, so it's buying something very cheap to then sell it cheap so that someone else can still have a margin and do what they want to do.
Exactly. And it's the velocity of money, getting your money in and out of the deal as quickly as possible. Oh, I've done something wrong. Gemma, I said the word deal.
What does that mean?
I said the word deal, and I've been told that. So the idea behind this podcast was, it's called Getting Hammered. I'm a big fan of drinking, as everyone knows. My handsome business partner does not like to drink. So the idea was, every time we say the word deal, we will take a shot. And today we both brought our cars. So in the spirit of like not losing our licenses, we're going to have ginger shots instead. So if we ever say deal and you see us not to this, you can shame us in the comments. Please do.
Cool. So every time we say deal, we need to take a shot.
Oh, that's spicy. It's a spicy one.
So John, tell us a little bit about who you are, your investing history, and what you're focusing on investing-wise, and why.
I am a property investor. And what that means is I'll buy anything property. When I first started, right, and this is what's crazy, because I always knew I wanted to buy properties, hold them, invest for the long term. And I would work, save up some money, buy a property, usually just a standard buy-to-let, and then would go again. Would wait, save up some money, then buy another property. Obviously, it's the most unsexy investment strategy ever, but I always focused on generating more money. So when I was employed in my previous employer, it was increase how much money I got paid, so then I could bury capital away by buying property. I didn't really subscribe to the BRR method. It was make more money. As soon as I've got a bit of cash, buy another property, and just try and do that every year. Now I've got 10 buy-to-lets. I'm not really overly bothered about adding more to it unless it's a really good deal. Oh, God.
Oh, yeah, shit.
No. I feel like this is going to... I'm happy I'm not actually drinking. I'm really happy I'm not actually drinking.
Blah.
So if I get a really good discount from a property and it yields very well, I would tend to hold it. But the main focus just now is obviously building the business, building Prime Property Auctions to become the biggest in the UK. And investing is just the trading of properties, buying something cheap and then selling it for a margin as quickly as possible. Just really building up that cash pile.
Yes, very much in alignment. So for myself, me and Gemma started doing the BRR method. So we'd buy, refurbish, refinance, and we grew a portfolio to 8 properties, and then got involved in Prime, of course, with yourself. And the shift we shifted towards creating capital, which is focusing on the business to then invest. So rather than trying to grow a pot that we had, add more to the pot through trading income and then invest that. So I think at the moment we've still got 8. We haven't bought anything in years, and we're just paying off the mortgages on them. Because
that's actually, because I remember one of the first conversations that we ever had before I came and met you in your office down. You put a post up on Facebook, and we had a brief chat about investing.
Yep.
And you were obviously doing BRRs, but you also were like conscious that you're paying down the debt, and that's always been my thing. It's like, I've worked in auctions my entire career. And I have seen people who have been massively over leveraged and then just lose everything. So every time I was buying properties, I was making sure there was always equity in the property, all while paying the debt down. So I use capital repayment mortgages.
Yeah.
Just because I know if I did interest only, I would never actually overpay.
Yeah.
So it was just the alignment there of like buying properties in decent areas and then reducing that the debt as quickly as possible.
Yeah.
So
but as we've both seen, like there's nothing like the returns you get in business. No property will give you the same return that putting X amount of ad spend would get you. For example,
10% on an annual basis, whereas you can 10x your money.
Literally.
You're putting it into your business. So,
quite literally.
do you think you'll ever buy a property to hold again, or do you just like it's just like trading?
Very good question.
Because you and Gemma did a flip
Yes.
before.
Yep.
Do you think two barreled?
Yeah.
Will you ever buy to
hold.
add to the portfolio, and will you ever actually perform a flip? Actually,
Front
a back
Front flip. Back flip. So I think Gemma misses the refurbs that we used to do. Gemma's a very good project manager, and she gets to release her creative energy on refurbs. So I think if we do it, it'll be more just to do a refurb, Gemma. But I think to hold, yes. I think at some point, once we've paid off our properties, we will probably keep buying property because it's a great investment. It is a great investment. I'm just not a huge fan of leveraging up. It's not so much that, it's more just the psychology behind it. I'd rather not have debts so that I could go be aggressive in the business without having to worry that what you've had to fight for is at risk because there is debt. And when there's debt, there's risk.
Well, that's it. When you've got debt, you don't own the property. The
Bank does, yeah.
decide to. I mean, we've seen it happen.
But again, that's probably, we're also quite biased in our
Yes.
opinions because we see what happens when you don't manage debt properly.
I mean, remember when we started and we had a very good client that his interest rates went through the roof, and it was like, I want this, I want this, I want this. I'm not taking anything less. And he's like, I need to sell it now. And he went from needing, there was a big portfolio and needed like 1.3 million to, I will take £900,000.
Debt is a great tool it's a great tool, but it has to be managed properly. And when you don't manage it properly, you can get yourself into some very sticky situations. And a lot of the time we end up dealing with those situations. So
See the idea of like owning 100 properties but you're 80% leveraged on every single one.
Yeah.
Fucking owning 10 properties is a pain in the arse, as it is. With like things breaking and
imagine 100.
but 100. But then there's people like that's how they can do it.
Yeah.
Like they're built differently to you and me.
Yes. That's the other thing. But again, there's different strategies. There's no right or wrong. There's no rules in this game.
We are very biased on property trading because we have an auction house.
And it's easy for us to do because we have an auction house.
Yes.
Yeah.
And that's why we obviously talk about it, because we know if you buy that for that, we can sell it for that. And it's very simple. Like for us, you're in, you're out, you've got your money back, plus you made your profit, and you've got the whole capital. Whereas if you buy something, you refinance it, you've got the property, but then you're just waiting.
Yeah, I think Jesse was speaking to Taylor about it, and he's like looking at a deal, and he could potentially trade it through us, but he could also just hold on to it and make £1,000 a month cash flow.
He said you could trade it and make 40 grand.
Yeah.
And he was like, but I'll cash flow a
grand
grand a month.
And they go, how long will that take you to get the £1,000 a month? Right? And then what could you do in the meantime with the 40 grand that you've just made? Could you do some more trades? So I think that's how we see it. It's more like how fast we're getting a return.
And I think there's an important thing we are still very active. Like this is active income.
Oh yeah.
It's not, and people who want to subscribe to the passive income life and buy properties and collect the rent, then buying and refinancing, that's probably the way to do it. But for us, we're in it, in out.
Yeah.
So we also need to be finding more properties, to be constantly buying, to be constantly selling them. Whereas if your goal was to own 10 properties and just have them on interest only and just live off the income, then that works too. We decided to start this podcast purely for the fact is we kept on getting asked the same questions over and over and over again. So the whole idea, like we want to become the best the most trusted auction house in the UK. So we really want to be as transparent as possible. I mean, the number of people think that we are stealing these properties and then selling them on to make a profit, or why is anything go to auction? It's only terrible properties. And this whole series is to really show that that's not the case. But this specific episode is going to go into property trading. Lewis and I are obviously very vocal about the properties that we buy and then put into our auction and sell for a profit. And we want to go over the common questions that we get from everybody of, one, how we find these deals, how we finance these deals, what the best deals are, how do you know, etc., etc. So if we'll cover everything, and hopefully it will shed some light on what property trading actually is. Can you do it? Should you do it? Why you shouldn't do it? Why you should do it? So Lewis, do you want to explain to the audience the difference between trading property and flipping property?
Yes. And we've kind of worked really hard to kind of to distill down how we could explain this in the simplest way. And this is it. So flipping is where you buy a property, you do something to it, whether that's a refurb or something like that, to add value, and then you sell it for a profit. You're buying, doing something, and then selling. Trading is where you buy something for a good enough price that you don't have to do anything to it, and then you sell it for a profit. So in one scenario, you're buying, doing something, selling. In trading, you're buying, doing nothing, and then selling. So it's pure price arbitrage. You're buying something for cheap enough that you can then resell it to someone else, and there's margin for them as well. That would be probably the simplest way of putting it.
Definitely the simplest way, especially because some people will trade properties, but they will effectively flip them. But they're only holding the property for a month or maybe 2 months, which again is probably the speed element to the trading. People who flip properties, they're probably taking 6 months to do it up, then they put it on with an estate agent, then they're hoping for the 20% over home report, whereas we've sold a property that had a home report of 75 and we sold it for 55. So again, there's still a really big discount.
No margin for someone else to take on. And we're speaking to, is it Taylor? Taylor, we had dinner with Taylor last night.
Yes, Taylor and Donald.
We were complaining that one of our trades was taking like 3 weeks instead of a week to sell. Meanwhile, Taylor was obviously doing lots of flips and projects, and he's talking in timescales. It's like 6-7 months to get your money back out.
Yeah, especially they actually asked us what our longest trade what we held was, and I think it was maybe like 8 months, of which was also a property that was tenanted at the time, so we were collecting the rent. But for us, 8 months is a very long time.
Yeah, it's very, very long.
Because our standard time to actually hold a trade is maybe a month.
Yep.
At most.
Yep.
So
we want to get in and out, and we're happy to take a wee bit less on the sale just to get our money back and redeployed into something else. But you can only be like that when you have a good pipeline. So
yes.
We do a lot of work and spend a lot of money building a pipeline of deals that mean we always have something we need to put money back into, which means that we're happy to maybe take a little bit less to sell what we have on the books.
Definitely.
To get the capital back. Where do we get our leads from? This is something that a lot of people ask us all the time. Where do we get these trades? So we spend a ridiculous amount of money every single month on marketing, on Google ads, on Meta ads, on radio,
on TV,
everything. And we have quite a good referral network as well. So
yes.
We have agents that know us, that know what we do, that if they have a client that maybe has something they want to sell really quickly or is in a bad condition, they come to us to see if we can help. So that's where we get most of our trades from. It's actually from agents and sourcers.
Agents and deal sourcers, because estate agents use deal sources as well. I mean, as much as deal sourcing, there's no way we can actually do this thing without saying the deal.
Oh yeah, shit.
No.
How many times have we said deal?
I said it about 300 times, I think, in one sentence.
Getting healthier.
This is it. But they will go into a estate agency, look, we have access to investors, and we are investors. We will buy things, and when we do buy, we're cash. We complete in 2 weeks, and that's the main, obviously, positive of
Attraction for a seller, probably.
exactly. Like, I'll go, I've got a buyer and I know they'll complete. So when one of these sourcers comes to us and says, I've got a property, 9 out of 10 times they're usually on the market with a local agent, and the seller's fed up and they just want it sold, because the estate agent could refer it to us and we could sell it on, but in which case agents know when their client is really at their wit's end and they're like, okay, well, actually now they just want it gone for whatever reason. They have a price in mind, and if a sourcer comes to us and says you can buy this for 30, I mean, we bought one in Cumnock for £32,000 and we put it on the market and sold it for 45.
Yeah,
and that was from an estate agent.
Mm-hmm. That was on the market with them and sitting on the market with them. So I think it'd be good to give, because we've talked about like what is trading, like, in theory, but let's give some examples of like what we've done so people can understand. So what are some recent trades that we've done?
What was the most recent one? We bought a flat in Paisley, tenanted property, and there is issues with the building. The seller didn't want to go on the market. It was like, no, I just want to get it sold. What offer would you make us? So we made the offer, happy enough with it. And then again, we've sold it on to a client of ours that buys high yielding stock. So they don't care. They've got a price what we are happy to buy it for. So I think we bought
Howard Street?
Yeah, so we bought it for 16 and we sold it for 25.
Yeah, 16.25. And then that guy who bought it from us might even try and sell it himself.
Yeah, because it's tenanted at 475 quid
which
a month.
Is a mental yield.
So he'll probably just hold it, and then he would trade it on and try and get £40,000 for it. But he's happy to wait, collect the rent, whereas we obviously want to get in and out.
Let's think about some others that we know investors have bought. So we bought one in Montrose for 16 plus a 4k fee, or is it 15 plus a 4k
15
fee?
plus a 4, yeah.
So 19k all in, and that was Taylor McDonald that sourced us that deal. And then we sold it to Christy L for 35. Really quickly, I think it was the day it went on the market with us.
So I put it on my Instagram stories. So we had it listed, and then I just took a screenshot. Property now available.
That guy buys everything. Fucking
honestly, Christy L messaged me and was like, "I'll buy it." And he was like, "What's the price?" And I was like, "Look, we're looking for ideally 35 plus."
Just send you the money, doesn't he?
And like, he just sent us the buyer's fee straight away. Boom, it was in our account. Like, I'm buying that. I was like, guess we're selling it to him then.
Decisiveness.
And he also in literally the next message, he went, "Is that the one that you just bought for 15?"
Yeah.
So he didn't care. He was like, I can make it work.
Because what did he do after?
Well, he's done it up. He spent 20 grand on it, and now he said we thought he'd refinanced it for 80, and he messaged the other day, says like, haha, it's 95.
Is it?
Something. Yeah.
Fucking hell. 95. And
so he's got a free property.
That's an SA, right? Or is it?
I think he's just running it as a buy-to-let.
Buy-to-let. But he's got all his money out.
Got all his money out. He's happy. He's got a property. He'll rent it out.
Yeah.
We are happy. We got in and out and got the property sold. I think one of my favourite ones was one we bought off of Adam Wright.
Yeah.
It's a house in
Ardgay.
Yes.
I'm
hard and I'm gay. One of your better Instagram moments.
He goes TikTok. It went.
And so we paid 63 grand. We paid Adam like a 7 grand sourcing fee. Like, it wasn't cheap. Obviously, we had ADS to pay on it, but I was pretty confident we'd sell it worst case scenario. And again, when we look at these trades, we always say worst case scenario, can we get our money back? Like, if we need to run away and say, okay, it's not worked, will we get the purchase price, the fees, the tax back?
Return of capital.
Yes.
Instead of return on capital.
Correct.
Absolutely.
So worst case scenario, we're going to get our money back. We haven't made any money. We might have wasted some time, but so that's always worst case scenario. But I was like, we'll probably sell for 90. Maybe 100, and we sold it for 110 grand.
Yep.
And that's a person who was super happy. They got it. They're doing it up.
As a homeowner, right?
Yeah.
First time, or I don't know if she was first time buyer, but she's looking to live there.
Bought it in the auction. Super happy.
Yep.
Yeah. So all the properties that we've just gone over there have been in a state of disrepair.
Yeah. Most of them are.
They all could benefit of being done up and then flipped.
Yeah.
So, I mean, people always ask, why don't you just do it up and flip it on? I say, well, why would we? We can just sell it to you. You can then do it up.
I think the thing is, we have the infrastructure of the auction, which means we can sell it really easily. We don't really have the refurb team or anything like that. So we'd rather sell it to someone, get our money back, make a profit. So that someone else that has a refurb team and has the willingness and the experience to do all that stuff, they can make their profit. So I think some of the best deals that I know personally, people that have done, they've bought from traders, not necessarily just us, but they've always bought from a trader who's bought it really, really cheap somehow. They've bought it, done the work, and they've made a crazy, I've said deal again.
Probably. I think I've done mine.
Where do people find trades? So we've obviously talked about where we get our trades. It's through our own marketing, but other people.
But you can buy them on market. We did a talk at Edinburgh Pin, and I was like, is everybody a property investor here? It's like, yes. And I put your hand up if you're a property investor. It's like, you need to be telling people that you will buy properties. You need to be in the right rooms. We had a property that was traded through us, because obviously we want property investors to buy deals, and then if they give it to us, we obviously make money, because we will then charge a fee once we sell it. But if they can buy something at £20,000 and then sell it for 50, obviously they'll be super happy with that margin, and we'll charge a buyer's fee plus we charge a seller's fee. We'll be super happy with our fees. So we had a client that bought a property in Barhead, and it was through, he was doing the BNI meetings, and there was a joiner in there, and the joiner came in, and it was an inherited property, and the joiner went in and was like, this is too much work, I don't want to actually take it on. And the seller was just like, I need it sold. I've got a price in mind that I'd be happy with. So the joiner phones this guy who's in the BNI. He's like, I've got a property that I think might suit for you to do up and sell. So he texted me the address and said, John, I've got a good discount on a property. I almost said the band word.
You say, I'd like a wee shot.
Oh, right. So he was like, I've got a good deal.
Oh,
we're really going to get hammered. I wish I wasn't driving and just get smashed. He texted me the address, and I had to look at the comparables, and he sent me over a video walkthrough and some photographs. I said, worst case scenario, you're probably $39,999, so under the 40,000 ADS. Best case scenario, I think you're probably 50, maybe 55 at a push. He's like, excellent. I'm going to go ahead with it. Purchased it, put it through the auction, ended up selling for 63 grand or something, 62, I think.
Yeah, I remember.
And he phoned me after, he's like, there's no way. And that was sold to an investor who wants to do up that property. So there's still clearly margin in him for him to do it up. And that's just from being in the right networks. Like somebody who's, Chris DL has bought properties just walking his dog and stuff. But then people, like, you'll see an agent walking out from doing a viewing or chapping the door and stuff. So these properties are everywhere. But as you say, it's getting the property at the right price.
The price is everything, yeah.
You can't buy something for full home report value that's already all done up and then just give it to us and then expect to make 20 grand.
Okay, good price. How do we know what a good price is? How do you know what a trade price is for you to buy? I think looking at what you need to what you can sell it for, and then working backwards. And I would work out what you could sell it for as what would be attractive to an investor who wants to do the work and then try and refinance.
Then there's also and this is, I tell every investor, ask me. Just ask me. I literally had a call today with a guy who's just traded something through us, and he's buying a flat in Linwood. He told me the prices I agreed at, and I was like, that's not a trade. There's not enough margin in it. By the time you add on your ADS, even if you spend some money, like maybe tied it up a little bit, I was like, it's not worth it. And he's like, cool, well, thank you for being honest, because I was going to keep it as a buy-to-let, but obviously we've just traded this other one through you. It would have been good if we could do this one as well. Yeah. So you need to know your numbers. If you buy something super cheap, because you could be like, oh, I've bought something amazing, I bought it for 20 grand. But then they come to me or you and be like, that's probably the trade value.
Yeah.
You can think cheap is cheap.
It's like, if we were to give it a formula, so I would look at what you need to sell it for is 25% below the market value. that means you'd need to buy it for whatever you buy it for less than 25% off would be your margin. So say something is worth 100, you'd probably need to sell it for, say, 75, 80 at auction to get it sold really quickly, which means that anything less, whatever you buy it for would be your margin, the difference between the sale price and that. So you'd probably want to buy that for, say, 60, 50, 60, something like that, for a bit of a margin.
Yeah, I mean, it depends on how much effort and what are you wanting out for it. Because one of the biggest traders I know, when I first started working with him, 10 grand. That's what he was like. If I can buy something, I can make 10 grand. That was his formula.
Yeah.
So if I can buy something at 10 and I can definitely sell it for 20, I'll buy it. If I can buy something at 20, I can sell it for 30. Obviously, it's these properties he maybe could have got a little bit more, but he wasn't worried about his pipeline.
That's it.
There was always going to be more properties coming to him. And I think this is why property trading for us is a fantastic strategy, and it's quick. You're in and you're out. You can build your pot really, really quickly, because there's loads of these properties out there. I think people get worried that, oh, well, if I buy this and then I just trade it, I'll make 20 grand. But if I do it up, I could make 40. You're like, yeah, but how much more capital do you actually have to put into that?
Yeah. Also time. So it's time waiting for it to sell as well. When you're selling it through auction as well, that's 28 days. You're getting your money back quickly. I mean, most of our trades are like, we're buying it for, say, 30, selling for 40. That's probably the box standard.
That's the sweet spot.
We've done a few trades that are above that. We're buying it for, we're paying ADS basically for it. But most of them are sub. They're like 20, buying for 20, selling for, say, 40, buying it for 30, selling for 40. That's the kind of sweet spot. And there's enough margin for someone else. So in terms of how we get trades, how we buy trades from the leads we generate. So when we speak to leads, we give them two options. One option is we can buy the property from you, and then we will sell it through the auction ourselves. And this is if you want a really quick sale, and we'll cover your legal fees and all that kind of stuff. So it's really quick, and it's more for people that want rid of their property. But that's only a very, very, very small percentage. Most people will just go to auction themselves because they're happy to wait a little bit longer to get the best price. So in terms of percentage or number of trades that we have from our leads, it's a very, very small amount.
It's only like 1 month that is actually generated
from our marketing.
Our own marketing. The rest of the stuff is through sourcers and just our network.
Probably like so we'll probably generate like 400 leads a month, something like that at the moment, and maybe one of them will be a trade. So that's a very small percentage.
The thing is as well, is there is opportunities there, because one of our clients bought a commercial property up in Dundee, was bidding the auction, bought it for a good price, and then he literally was like, I'll give it back, gave it back to us 2 months later, and he was like, I want 90 grand, because sellers with ourselves set the reserve price. So if someone's like, buy something, like, I want you to get me £90,000 for this. Okay, well, we will try our best. So he bought that for 60 and then sold it for, I think, 78 or something.
Yeah.
Waited 2 months to actually get it sold. We didn't see it as a trade. But somebody made us an offer.
Yep.
We took it forward. So people can still buy and trade from us. You can also buy from other auction houses, obviously.
Yep.
Sam Dyer and Stephen Clark bought the first ever property that I sold with Prime. It was a property that was bought from another auction house. They went in, ripped out the kitchen and the bathroom, put it on, and then sold, and they made like 12 grand or something.
That's it.
It is all about. It's risky though. If you're just like, I've bought a property, and then please can you get me £100,000?
Ask us what I would get as a trade, and then work backwards. People have done that. Like they've bought. We had a whole YouTube video interview with a lady called Swati who went to one of our talks in Edinburgh.
We talking about trading.
Talking about trading. She was like, that sounds great. So she went and bought a property for not an insignificant amount of money.
Yeah, it was over 100 grand.
Yeah.
120 grand or something like that.
And she's like, right, guys, we've bought this. I want to trade. Let's do it. And we're like, oh my God. But we looked at it, it's like, okay, there is some margin there.
Definitely
like it's you bought it at a good price. We put it on and we eventually did sell it, and she made, I think it was a 40 grand profit as a trade, but she hadn't consulted before. So definitely speak to us, ask for her opinion beforehand, and then work backwards.
But and it's important to remember that the trading of property is good, and we are just looking to trade. But worst case scenario, if something's sitting there, it's not selling for the price we need, we can either just sell it for what we've paid for it, if we wanted, or we can spend some money, do it up, put a tenant in and sell it that way.
Yeah.
So it's not like a property that is tradable. That's all you can do.
That's a very good point. That's a really good point.
Obviously, it's and people say this to me. So, okay, what ideally would you want? Well, I think, what ideally would you want? Ideally want £50,000. Excellent. Well, let's give it a shot. If it doesn't sell, what were you going to do with it first? I was going to do it up and refinance it. Well, let's try and trade it.
Yep.
If nobody buys it, then you
have other options.
Plan B.
Yeah, you get plan B. And that was the thing with Swati. So Swati, she put the property in the market with us. We were getting offers, and I was trying to convince her to take the fucking offer because I thought that was it. But because she had another option of just doing up the property, she was able to stand firm. And eventually someone did go to what she wanted, which was, I didn't believe. And then she made a great profit. But in theory, every trade should have multiple exits because of the price that you've bought it at. Either you trade it on to someone else or you just do the work.
We've obviously started this podcast to shed the light and really make everyone aware of how buying and selling at auction works. Yep. Ultimately, the question we always get is, are you guys buying all the best deals? And the answer is no. Like, most of the properties we buy are from sourcers, and our preference is usually just get it on the market because there's less capital for us involved just to put it on the market and sell it to somebody else.
The guys that get the best deals and get offered deals buy.
Yes.
Chris DL gets deals because he buys.
Well, it's funny, we negotiated a deal with Chris DL. It was actually with another auction house, but I knew the seller. And Chris was like, well, I'd deal with you. Can you phone the seller? To be fair to the sellers, they were like, it's on with another auction house. It has to be done through them. And I was like, cool. But I negotiated back and forth, managed to get a price that they wanted. And I said to Chris, I think he was at like 100. And initially they wanted 130. But they were also traders. This is the thing. So they'd bought them from another auction house, gave them to another auction and traded them. And they were like, do you know what, John? If he goes to 110, we'll do it. So Chris DL was like, 110, you get it. You can always offer less. And he went, do you know what? Nah, I'll just do 110. Like, he didn't even try and go back because he knew what he could spend doing them up and what they were worth out the back end. Yep. So he was like, all I want is, I want a deal. Because if he lost out for the sake of $5,000, he said he would have been kicking himself.
Yeah, of course.
So he was like, the fact I knew I could get it at 110.
Just do it.
He did it.
Pull the trigger.
Exactly. And sent the other auction house the money, and it completed, and everyone was happy.
That's it. And this is an important thing to remember or to understand, is that the big traders that we know will do a deal to build a relationship, even if that deal isn't amazing. They will buy something, sometimes at market value, to help an agent out so that they can then get future deals.
It's interesting as well because the biggest traders they've got so much volume, they've got a good pipeline, and the more properties that are coming across your desk, it's like, well, if I make $5,000 in that one, great, maybe we could make 10, but I get my capital back out. I've made $5,000, and then another one comes going, okay, I make 10 grand in that, but they're not looking for the 20, 30, 40, 50.
They don't have one deal they want to do to make all the money.
This is my only deal.
Deal. So, how does someone know if they have a potential trade? What should they do, John?
The best thing to do would be to text one of us, genuinely, because we know the market, we know what's selling, what kind of price it is, and then we can say, based on sales evidence, based on the photographs you've provided, we expect it to sell for this price.
Yeah.
And if you then have gone, excellent, I've bought it for 20 grand cheaper, then it's probably a tradable property. Yeah.
Or even if before they've negotiated price, that's probably the best time. It's like, what can I buy this for? Or what can I sell this for as a trade? We say 40. Okay, now I know what I need to go and negotiate to make my margin.
I think, you were looking at a property in Bud Hill or Toll Cross before we started working together.
Yep.
And obviously I did a talk on what is now TIW Network, but it was Sam Dyer's mastermind or something like that. And I was talking about how you can use auction, you can buy, and you were looking at a property that was on with an estate agent.
Yep.
And I literally said that. I was like, this is what I think I could sell it for. And you're like, okay.
Yeah,
and
that's it.
And you went to try and negotiate it so you could make a quick margin on it.
Yeah. So definitely use us. Text us. We get texts every day just with an address. It's a 1-bedroom flat on this street. What do you think I should go for as a trade?
But just
We
on
tell
that,
you.
we need to have information. I had someone who just messaged me like, how much would a flat in
And
Ridley
Dennis,
go for?
yeah.
It's like,
Yeah.
it's like, oh yeah, how much will you trade a property in Glasgow for?
Yeah. Give us a bit more than that.
We
But I think
need information. Ideally, full address, how many bedrooms, photographs, and help.
photographs would be ideal.
Photographs help so much. Because we've done a number. We did a JV with Matt Morrison as well, which was a great one again. But he had it. He knew he had agreed a good price, but it's the comfort level of like, well, tell me how much.
Why would someone buy a property from our auction that we have traded?
It's actually it's funny because people get annoyed if they see that it's just been bought, and other people are not bothered because they're looking.
Yeah, the experienced guys who do this don't care because they know their numbers. They know what they want to get from it. Yesterday we had one of our trades in the auction or live, and a guy made an offer at a price that we were happy to sell for.
He was happy to buy for.
And he was happy to buy for. No negotiation, by the way, in terms of getting him up or anything. He then did a check with a solicitor, and the solicitor checked it and found out that we'd bought it the week before or the day before for
a
lot less. On that basis, he backed out.
And that's what's mental. It's like, because you guys have bought it, and you're going to make money, but it's like you could still make money, and you're happy with your numbers before. And the irony is, he'll probably never buy from us ever, because next time he makes an offer, it's like, well, you will just make an offer and then run away.
Yeah,
people will do that as well. Like,
so, honestly, that's another thing. But I think just be confident in your numbers. If it works, doesn't matter what the person bought it for that's selling it. And that separates the newbies and the experienced guys.
Yeah, I think as long as you are confident on how much your refurb's going to cost, you like the area, if you're going to use it as serviced accommodation, what is your occupancy rate? And it's run all your numbers. Does it make sense to buy it at £50,000? If so, does it really matter if we've just bought it for 30? Who cares? Which we actually had one. We sold the one we sold in Aberdeen, and
which one?
Balmoral.
Yes,
Balmoral. And he, when I was speaking to the buyer, and he went, I told him, so it's one of mine, just so you know. And he went to ask. He was like, so how much he's like, actually, I don't want to know. He's like, because he was happy with the numbers, so he didn't want to actually like for him to think, oh, well, I could have bought it for that price, because he couldn't have bought it for that price.
Yeah, of course. And we got that lead through our marketing, paying thousands and thousands of pounds, and dealing with the seller for a good while. Just to give an example of that situation, so that seller was living in England. They had that flat. It was sitting empty. They just wanted it gone, and they got in touch with us on the basis that we could make them an offer. So I made them an offer, said, look, this is what we'd pay for it. They were very happy with that. And we bought it, I think it was a 2-week completion, really quick. And we bought it for 35. Home report was 75.
There was no home report when we bought it.
When we got the home report done, 75. And then we sold it to this buyer for 55. Everyone was happy in that situation. And there's plenty of margin for this buyer.
Exactly, because especially when we're buying stuff, it's, do you want to go in the market? No. What will you give us? This.
Yeah. And we tell them, you will get more money if we go through the auction, because what we're going to do is just sell it ourselves. It might take longer. We're taking the risk of not having the certainty, but that's your options. And a percentage of people are happy to sell it to us. And that's how we get those deals. Yeah.
Especially because cash buying companies, like we buy any home as a company, just like we buy any car. And that's what they do. They're buying properties so then they can resell them on. What we don't do, if we agree to buy a property, that's the price.
We don't chip.
We're not going to, because ideally what we do is we get the photographs and video from the seller, so then we have eyes. But what other cash buying companies do is they agree, okay, so we'll agree to buy this for £100,000 subject to our survey.
Yep.
So they then go out, they have a local agent appraise it, they email me as well and say, John, what's this? Because when fast buying companies also use auctions to exit.
Of course, yeah.
But sometimes they'll get a high street agent and an auction valuation for whichever they're going to choose, and they get a survey done. So they'll actually go out, get a home report done. So say if something's worse than they initially thought, then they go, well, we know we said we were going to give you 100, but now we're only going to give you 80. By this point, it was like 2 months down the line.
The seller's already kind of committed. They've organised their life that they're going to be selling to this company, and then they're more amenable to taking a price drop, which is just how it works. And usually what a lot of these companies do is they'll have like an instant valuation. So they'll have some sort of software that tracks the average house price on that street, and then they'll just take a percentage off, and that'll be what their valuation is, subject to an inspection or a survey. And then when they do that survey, as you say, they just chip. And the seller's so far down the line that they're just like, a lot of the time they just go with it. But I don't see it as a transparent way of operating. With us, when you request an offer, we'll get on the phone with you and we'll make you the offer. And that offer, whatever we offer, is what we're going to pay for it. It doesn't change. So, yeah. So
chipping the price, we should probably.
Yeah.
Gemma is here making sure that we don't say things that people don't
like jargon.
Have a clue what we're on about. And so chipping is reducing the price. You are
chipping.
Chipping away. So you're reducing the price slowly closer it comes to completion.
Yes.
You find reasons to reduce the price. Oh, we didn't understand about this, therefore we're going to...
that roof's a wee bit different than what I imagined. Yeah.
Whereas we offer like cash, clean, we complete in 14 days.
Yep.
The only thing, we're all subject to like nothing outstanding in the building.
Yep.
Is the most important thing. Because if we're buying a property and it's got a 50 grand roof bill, we're not going to buy that.
Sometimes we'll buy something with a bit of a bill. 50 grand, probably not. But problem properties, by the way, is what we deal with. We deal with problem properties, whether we buy them or sell them through the auction.
Okay, so obviously we're talking about trading, we're talking about making £10,000, £20,000 in some trades, but not every trade goes that way. We bought a property in Largs that I was fairly confident we would sell for £25,000. So we agreed to buy it for 15. We paid the sourcer 3. Obviously we've got insurances and legal costs and stuff like that. And we ended up selling it for 20. Is it 2021?
Yeah.
So there's, by the time that we've got our holding costs, insurances, everything like that, we've made fuck all. The sourcer made more money than us.
Yep.
So not everyone works out perfectly.
But we managed to buy at a price we could get our money back.
Correct.
So that's like the worst case scenario.
And for us, we're okay because ultimately the properties that we're buying brings also buyers to our website.
Yep.
And we're fortunate enough, we have a good enough network that we can always shift these properties.
Yep.
Worst case scenario. But we do try and buy right. And again, it's looking at the numbers and being pretty confident of worst case scenario. If we want to get out of this,
what we're going to have to take for it.
What we're going to have to take to.
Okay, what's our best deal? What's the best deal we've done?
Definitely George Street.
So bought for 25, sold for 71. That was a person that had so I spoke to her on the phone. So she had a flat that had some sort of I think it was a flood or
so there was the
leak.
water
Burst
burst and flooded the whole flat, and then she got an insurance
paid. So she was like, I think they'd done first fix and they just left it at that. And she was like, I don't want to do any more work to this. And I've got the money from the insurance. And
she was moving away to France.
Yeah, so she was moving down, and she was like, "Get this sold.
Like this is the price I want.
This gone." I think she said, "I want this gone by like next week because I need the money to move or something."
Correct.
So we offered her what we could buy it for. It was non-standard, so that was the only risky thing we had about it. And it was like, okay, 25, we'll pay for it. And then we managed to sell it for 71. So that was a very, very good trade.
Very good.
But we took a risk, and that's what we get paid for. We take a risk when we agree to buy stuff that has issues. So we need to price that into what we do.
Definitely. Again, worst case scenario, we were like, we'll sell that for $39.99.
Yep.
Really, was probably what we thought. It worked out very well.
Very good.
So we have done a little poll, or we asked our followers what you would like to know. So we do have some questions here that have been asked to us. What's the typical profit on a trade?
On a trade, I think we work on a percentage. So if we can make 20%, something like that on our money. In terms of the profit we've made, again, we'll be transparent. So last year, on average, our profit was 21 grand per trade. But we like to have about 20% margin, because obviously we're dealing with very cheap properties that we're also going to have to sell pretty cheap. So rather than looking at, it needs to be at least 10 grand profit, it's more like what return are we getting on our money, and how fast are we getting the money back? Okay, how is best to finance trades? Should people get bridging loans? Should they get private lending? What should they do?
In my experience, the best way is to try and buy cash, purely for the fact is, as we said, they're not always guaranteed to sell. And if you are on a bridging loan and you're trying to trade something, bridging is obviously not cheap. Mm-hmm. So if you go, well, I need to make £10,000, and then you hold it another month, and then that's okay, well, now that's only 9,000, and then so on and so forth. So cash. So if you've got private investors, then maybe cut them in the deal. Say, well, I have a good property that I'm going to try. We actually did a trade for a client that did exactly that. So it was Ryan O'Connor.
Yep.
And they had a property in Rosyth. And the reason he ended up asking me is because we traded a property. He said, I've got a property deal, and we bought it, and then we flipped on. He was like, how'd you do that? I was like, through this. So the next time he was like, what do you think this is worth? Instead of just like saying, do you want to buy this property? He was like, so what do you think this is worth? And it was a 2-bedroom ground floor in Rosyth. So done up, it was probably worth like 100 to 120. So sent me a video because it had been cleared by a clearance company, and it's probably like 70 grand in its condition, because if you spend 20, 30 grand on it, there's still that margin for it being worth over 100. He was like, excellent. So he used a private investor, but they created a company, the investor funded the deal, and then they bought it and sold it. And I think they bought it for because I was like, what have you bought it for? Like $39.99? So, yeah, something like that. I think they bought it for like 32.
What a deal.
So
brilliant.
Doubled their money.
So they cut them into the deal, so they didn't have holding costs, which meant they could make better decisions about what offers to accept. They weren't as motivated.
Exactly. Obviously, you're giving away a bigger cut if you're actually getting somebody in the deal with you, but there's less risk, and I think that's for me anyway. I would rather do it that way than go to a bridging lender and then the trade not working out. Because obviously we JV'd with Matt Morrison. We're always, if the deal stacks and you're happy to put money into the deal, we are happy to put money in the deal.
So what was the structure of that deal, so people understand how we would maybe JV with someone?
So the one we did with Matt Morrison, Matt had a certain amount of money he wanted to put in, which I think was 40 grand. The purchase price was 100. Obviously, because it was 100, it had ADS on it. So we covered the legal costs plus the ADS. We funded the rest, and we split the profit, 60-40.
Yep.
We obviously dealt with all the marketing and everything like that.
I think he doubled his money on that. Very good trade.
Yes, that was a good one. So if anybody's watching that's got a property that's worth 170 grand that you can buy for 100, we will definitely JV with you.
You also won't know that until you ask us.
Exactly. Good caveat. So what happens if a trade doesn't sell?
Trade doesn't sell, you have your other options. If it really was a good if you've bought it at a price that you can trade it for, then you should have other options. You should be able to hold on to it, do the work, any of those other exits. So, but if a trade doesn't sell, I mean, I think within a month, you should really know what's happening with the trade. I don't think we've really got over that time period to sell ours. We had that one that took ages, but that's very much an outlier out of all the ones we've done. So you usually get a very quick idea of how much interest something will get. And I would probably say a month is a good amount of time to know. But if it doesn't sell, you have your other options. So you can hold on to it, do the work, refinance, and then either or do the work and flip it.
Yeah.
Okay. If there's a margin built in for everyone, doesn't that mean that the end buyer is overpaying?
Well, the end buyer is probably going to be a first-time buyer of some sort.
Yeah.
And there's a reason that property investors make the money they do, is because they take the properties that nobody else wants to buy, that banks won't lend on, and then investors do them up to a certain standard so people can live in them again. So if you're selling a property with an estate agent, you've got to pay 20% over just to get it. Are you overpaying, or is that just the price that you have to pay to get that property?
Yep.
And again, first-time buyers and people that are needing mortgages to fund all their purchases are obviously not going to get access to properties at 35 grand that have to be cash buys. They also wouldn't want them.
Yep. They don't want to do the work.
They don't want to do the work.
Less and less people want to do the work. They want to buy something that's ready to move into.
Which is mental to me, because every property that I bought to live in has needed work done on it. And I was like, well, if I actually do it up, I'll make some money over holding it for longer. I've done the work on it. Well, I say I've done. My wife, Stacey, does all the work in the house. So at which point we can then say, well, we've done this, we've put new windows in, we've made it nice, and that's added to the capital.
Yep.
And we've always managed to get them for good prices. We actually buy them for under home report, because it's a pain in the arse living in a property and doing it up. And the amount of people that are known to me and my friends that are not into property, and they're like, how can you be bothered?
Yep.
And that's why you will pay 20% more.
For retail, basically.
Exactly.
Yep.
Because you don't have to do any of the works. So nobody's overpaying, everybody's happy. Because if you missed out on a property at a closing date, but you didn't offer everything, and then you found out that somebody had offered $2,000 more than you, and you're like, oh, we were going to offer 10 more, but we really wanted to put a new kitchen in and we bought it.
That's it.
Joys of markets.
Yes, exactly. Something is worth what someone's willing to pay.
Exactly.
That's the game.
So here's a question. Is there a conflict of interest when you guys buy the property?
When we buy properties, we buy them from either sourcers who bring us a deal.
Oh, what you got away with it when you just said sources?
Okay, so sourcers bring us a property, or the lead comes to us as a business and we give them the option of buying. Now, when we buy from a sourcer,
they've negotiated the price.
They're in contact with the seller. They've negotiated the price. We are buying it like any other buyer. So in that sense, I don't see a conflict at all. When we buy it as a business, as a lead that comes into the business, we give them the option to go to auction themselves, where there's not the certainty, but they might get more money.
We're also, I mean, the ads we're running now as well are, we will buy your house.
Yeah.
So it's like direct, like, look, this is an offer that we'll make. We will buy your property if you want. But again, it's a funnel for us to get stuff to the auction, because if people turn around to us and say, oh, it's worth 100 and I want 90, we are not going to buy that. But we can sell it. We can sell it for them.
Yeah. So I think the important part is we give them the option. So we don't say, look, we'll pay you 50.
This is all you get.
This is never going to sell for anything else. We're doing you a favour at 50. It's more like, this is what you'd get at auction. This is what we'd probably sell it for. If you want to just sell it to us within 2 weeks, we'll cover your legal fees. It's cash. This is what we'd buy for. And then it's up to you to make that decision. And some people, honestly, people can't understand this, but for some people, price is not as important as terms. Them just getting it sold within the next couple of weeks with no uncertainty, nothing they need to do to it, no work they need to do to it. They don't even have to clear it. They can leave it as is, especially if it's been inherited. Oh yeah, I mean, you've seen some of the condition we buy stuff in. But it's just the hassle factor, or the lack of hassle, that makes people want to just sell as a property. And there's always going to be a market for that. That's why cash buying companies have been around forever, because some people don't care as much about price as they do term.
Remember, the first ever trade we did was a portfolio of 4, and I had told the seller, look, if you split them up and sell them individually, we will get you more money. And he was like, they need to all go as once because I'm buying another house. There is margin there for us to buy them because we can buy them and then sell them. So I just spoke to the seller and was like, the only way for me to sell them for the real price that you're wanting is to split them up. I was like, but if you want them just gone, this is a price that we would offer you, but we will split them up and sell them individually as individual lots. And he was like, I don't care, John. If you offer me that price, excellent.
Yep.
As long as I get my money so I can buy my other house, I don't care what you do with them.
Yep. This is a belief that I think gets broken when you deal with auctions, because we deal with a lot of people that are in a situation where they just want a sale. They don't care as much about the other stuff, maximising the price. A recent deal we had, someone trading through us. What?
Deal.
Oh shit, sorry.
The buzzer.
I know. We have Gemma. So we had a guy who bought a property from someone and inherited it for how much, John?
Pack of fags.
He literally said, if you can cover my legal fees, I'll just give you this property. And then he traded it through us for £53,000. When you hear about these stories, it just completely shatters your belief on what people might sell a property for.
Especially because owning property is, you need to look after it, right? So
it's a liability.
It is a liability. I'm glad. I was going to say burden, but liability.
Burden as well.
A liability. Liability is a better word.
Yeah.
And as somebody who's inherited something, like, I don't want it. I don't want to have to potentially pay for exterior work or the factoring costs or whatever. Just please help me so I don't have to deal with this. And if you get those opportunities, I mean, obviously that's a once in a lifetime deal that client got. I mean, I genuinely, when he told me what he paid, and I was like, you are joking, right? And he was like, shook hands with the guy, and he's like, please. And the guy was thankful. He was like, thank you so much for buying this. That client did have to clear that property and spent some money making sure it looked nice for the marketing photos before we went in. Again, he's got the connection with us. He can just text us and say, what do you think this will sell for? Again, I actually said, I was like, 50 is probably a stretch for that, but I was confident at 39. And then obviously it went over 50, and I was like,
it's a good area.
Yes.
East End, I think. Okay. What if someone has a trade or a potential trade, but they just don't have any money?
Source it on. But genuinely, if you don't have money to buy the property, but you have the word that we're not allowed to say.
Deal.
So if you are direct to the seller, or you're dealing with an agent and you've negotiated a good price, you don't have any money, you have to source it on. There's the only real option. If you have no money, you should be trying to build up some capital. And a good way to do that is to source. So just messaging, I mean, literally the amount of sources that will message me, I have a property I think is a good price. Probably, I would offer this, I would offer that. So they can go back and try and negotiate with the seller, or they can go back and try and negotiate with the estate agent, whatever. But they will always bake in their fee to that. Okay, what's your fee in it? That's a better way. Because if you don't have a lot of capital, you have no capital at all, then you can't buy a property. You need to focus on building up that pot of cash.
So you help other people with money buying property to make some money.
So the difference between sourcing and trading, which is actually a common misconception, because some people call sourcing deal trading. No, I can't. I physically can't say it.
Our immune system is going to be tip top.
like I'm going to potentially pat my chance. I did an extra shot there just because I'm actually going to have to say. So the deal trading gets confused with,
for
with
fuck's sake, I
sources.
didn't
No, but
finish
that's why I
up.
did the extra
I
shot.
did it.
But trading, actually property trading, is buying it and selling it within a very quick period of time. Whereas sourcing is finding a good property. I hate you, Jim. I physically can't have a conversation without saying that word. So finding a good property at a good price and then selling it to an investor for a fee. And that is, I mean, that's our business. I think you described what we do the other day in an interview we had with a candidate is we are just deal sourcers on steroids,
Yep.
which I'm going to get tattooed on my body. I think. that's absolutely fucking
You
amazing.
said deal.
Damn it! I hate this game.
Oh, mouth's on fire. Oh,
God, I really wish. I would be having the best time if that was booze. So next time, I'm going to walk here. I will be getting shit-faced for
yeah, it's hammered.
He did offer to drive me, but I didn't want to leave my car in the town.
How do you keep on top of bills, council tax, etc. as a trader? Well, this is something to bear in mind as a trader, is that you will be owning property, which means you will be responsible for utilities and council tax and any repairs that might come up as well while
Yes.
you own it. So how do we keep on top of it, John?
Very poorly. Ultimately, it's we try and we as soon as we buy, well, we get them insured first.
That's the number one thing that we do.
As soon as you're going to buy something, get it insured, because I think the first one we did, I forgot to insure them.
Yeah.
Because there's no mortgage involved, and then you're like, oh, no one reminds you to do that.
Yeah. And they're not in the nicest of areas.
No, and there's obviously the holding costs. I mean, Ayrshire's like double council tax if you've got a vacant property and stuff like that. So it's basically once you buy the property, you will be notified. But the idea is sell it immediately,
Yep.
and then you
Deal with that shit after.
email the council and say we now no longer own this,
And they still try and sue
and
you.
they still try and sue you for a year's worth of council tax. We're being chased for council tax still for a property we sold last year, and they're like, you owe us this much money. And we're like, we don't own this property anymore.
Sometimes we get bills for properties we've never owned just because we're marketing them. Somehow we now are responsible for the council tax.
Yes, we also got we got a written for a property we've never marketed or never sold because clearly I whistled there when I said sold, because another company similar to Prime Property, and then so Alex phoned up and asked the council, like, where did you get like that we owned this property, and they said an email address. That's not this company.
Email address. That's how they
said, yeah.
Wow.
An email address. So with great difficulty, I mean, ultimately, and that's an important metric to remember when you're trading properties, that there is holding costs, and you want to make sure that you factor that in.
This has been fun. I think next time we'll have maybe more fun if we don't bring our cars, or if you don't bring your car. But what are we going to cover in the rest of this mini-series, John?
Everything from financing, deals, to finding deals,
I feel sick.
to deals.
3, 4.
So thank you very much, guys. We really hope that you have enjoyed our first episodes of Getting Hammered. Is that what we're calling it, Gemma? Cool. Getting Hammered. Where next time I'm definitely going to be getting hammered. And you can find us on Instagram, handle John_property auctioneer, Lewis_property auctioneer. We're also being a little bit more prevalent on LinkedIn at the moment. Really,
Yep.
so reach out to us. Whichever platform you are on, guess what? You will find us.
I'll just say our goal is to become the biggest and the best auction house in the UK. To do that, we want to be the most trusted. And to be the most trusted, we want to help you guys and educate you on how auctions work. And definitely get in touch and use our expertise to help your journey in property.
Don't be scared of auctions. Don't be scared of us. And as always, guys, get hammered.